Yeah, no, we made a high. Actually, if you go back and look at a silver chart going back to 1970s, let's say, and you see the peak in 1980 at 50 area, which was, very gaseous type peak. And it was, you were up there so briefly, it was thin air and it collapsed, okay? And then in 2011, early 2011, before gold made its high, silver got up in just short of 50, like $49 or something, and then dropped and held. This time, when we're up here in the 30s, for the last year, in fact, last May, silver got up to 32.70. Okay, dropped, came back up in October, hit 35. They sold it, dropped, came back to 35 again in March this year, and dropped and had that flush where people sold silver thinking, oh, silver's going to go down because the stock market's going down, which is an erroneous assumption. And the people who sold that got killed because silver popped back over 30 in a heartbeat from 27.5, and now we're pushing toward the 35 again. Getting back to 35 is what point and figure chartists would call, triple top. Now, I use the word top. It really isn't that case. It's a pending quadruple top breakout, or a triple top breakout, excuse me. If you go up to 35 again, I'm going to bet the next tick is 36 and you're gone. That's what the price chartist at that point will start realizing, hey, this action of the last year in silver, which has been violent, but still with a slight upward bias. Go back to last May, it was 32, we're now around 34.5, etc. They're going to realize, hey, we made a mistake. This isn't topping. It's been building a launch pad. Now, I don't trust price necessarily, so price says that. The only reason I would agree with myself about that 35 being a pending triple top breakout or a launch pad is that momentum says it is. There's a momentum structure when you plot a momentum oscillator of silver, where you measure silver versus like a 3/4 moving average or a 40-week average. You'll have a corrective process since last year, since last May. So 12 months of momentum cooling off while price held steady. And there's a structure on it when you look at the momentum chart that says, ooh, if I cross that line, I'm going to blow through. We're challenging that line right now. About another 50 cents above where you are now, you're gone. I think the first leg in silver is highly likely to take out the old dual highs at 50, which again are really phantom historic situations. They don't mean much. They were decades ago. And go probably surge into the mid-60s or 70 zone, somewhere in there, before it even pauses. Now, I don't mean that's the top. I'm talking about this next gush could be a tremendous move, meaning a near double in silver from current levels. And the key is to get up through today's high, which is like last I saw before we came on, was 34.65. You get up to about 34.95 and close the week there, and that momentum indicator I told you about says you're gone up. Price says you're exploding if you touch 36, triple top breakout. You see those, and I think you could almost double silver in a fairly short period of time, probably within 1 quarter. And again, that's not the top, that's not the end of the move, that's just getting up out of this historic silliness. Gold, after all, is well above those levels, right? Made a high at 850 in 1980, made a high at 1920, 2011, and it's 3,500 area. So silver hasn't done that. Now, silver to sort of match that would be up, $60, $70 level. Anyway, that's what I think is about to happen. Also, the gold and silver miners. My personal emphasis in my own trading is long gold and silver miners, long silver. Watching gold is the mama, but again, I think those two categories, subcategories of gold, we know they've underperformed for the last 3 or 4 years. Then that 2020 price surge we had in gold went up to 2,000, silver went up to near 30, and the gold miners, GDX, went up to 45, I think it was. Then gold sort of went sideways for a couple of years, but silver and the miners went into a staircasing decline. So since 2020 through the present, the spread relationship between silver and the gold miners in gold has been underperforming. Technically speaking, they look like they're ripe to turn up. fact, the gold and silver miners right now are on the edge of breakout. In other words, if you plotted that action, the spread action, since 2020, so a fairly long time, there's a structure on the chart you can see, and you're trying to break through it right now. If you do, it'll validate what I'm saying, further validate it, that the place to be is silver and the gold and silver miners. And I think they'll gush a lot more than the upside than will gold. I don't think that we're in a normal bull market. That I'm not saying that you've got to go a lot higher than the other ones did. I mean, even if you just matched the prior gold bull markets, which were 8-fold moves from bear low to bull high, you'd be $8,000 gold just to match those peaks. The $850 peak versus its $100 low that preceded it, or the, et cetera, et cetera. But the reality out there, aside from just markets, like political reality, economic stability, monetary notions, institutions that have helped create this crisis, like central banks monopolizing the production of money, that could end. And I think we'll end up in quite probably a gold silver world again, where it's money, it's legal. It can't be printed overnight at the will of government to pay for this program or that program. By the way, I noticed the other day, Florida, of course, legalized gold and silver as tender, as legal money. They're like the dozenth state to do that in the U.S. Now, when a state government legalizes a new money, gold and silver, in effect, that's saying to the central government, we're seceding from your monopoly control over what we call money. We're allowing gold and silver to compete with your, quote, legal tender. So in a form, that's a form of rebellion, quiet and peaceful, but it's a way to say, hey, we're tired of your money. It's not stable. It's never been stable. It's always been degrading in value. We're allowing the public to use gold and silver as legal money. And even some of the states are allowing you to pay taxes with that. They're setting up agencies to be able to accept gold or silver in payment for taxes. So that's the kind of rebellion I'm talking about that occur globally, where there's a transition among the more foresighted countries that we need to get away from this stuff. It hasn't been working. And so I think that means that when you get up there, you just stay up there, because that may be the new priced reality of, you get the point. Yeah, again, it's not high, because, in nominal terms, $8,000 gold versus $1,920 gold. If we went to 8,000, an 8-fold move from our bear low, which is 1,050, 2015. You think, well, that's crazy. No, it's not. It's just doing the same thing it's done twice before, 8-fold moves. Now, but again, I'm not sure that's going to stop it. I think this bull market, one, is going to possibly go beyond that because of the nature of the government debt crisis. Remember, in the prior bear markets, we had a dot-com bubble, okay? It spent itself, 82% drop, and the NASDAQ 100 took it 16 years to come back to its old high. So it was a wipeout. But it was a market situation. Yes, facilitated by monetary manipulations and so forth over the prior years. It created that bubble. And then we had the other crash, which was the 2007 to 9, but that was mortgages. Now we have government debt. And that's a different monster, because the central banks can't just thumb their nose at it. They have to come in. Otherwise, I won't tell you what's going on in the streets. You can't have that happen. So the question is, when are they going to push the button? Or are they already doing it? Some indications are that they are already intervening in the markets, especially the T-bond market. And when you look at the tonal action of that market over the last specials of the last 6 months or so, when it tries to drop, it suddenly seems to find a floor. It can't get off the floor, but it seems to find one, and it bounces, it keeps coming back down. Right now, again, bonds nearby future, which we treat as a September contract, is 112. Okay. You get down much under 111, like 110 area. It's a couple points, no big deal. it could implode. And that's when you'll have real panic on the part of the central government, meaning monetary excess, like possibly we've never seen. So again, what does that fuel? Gold.